Ladies and gentlemen, welcome back to Dinar Update. Now listen closely, because the next few minutes may change how you look at the Iraqi dinar completely. Not with hype, not with rumors, but with something far more important. Real infrastructure movement happening quietly behind the scenes. If you've been holding dinar for years, if you've watched global payment systems evolve, if you've ever asked yourself, when does the real shift actually begin? Then today's update is for you. Because something meaningful is unfolding, not on YouTube headlines, not in Telegram whispers, but inside the digital financial plumbing that moves money across the world. And when plumbing changes, the entire system's behavior changes. So stay with me. I'll explain what's happening, what it actually means, what it does not mean yet, and how to position yourself wisely, without panic, fantasy, or false expectations. No robotic talk today, just clear explanation, human tone, and grounded reality. Let's get into it. For years, the Iraqi dinar lived mostly in the physical world. Paper notes, limited exchange locations, middlemen, manual processes, slow settlements, wide spreads, and very little visibility in mainstream financial systems. That created friction. Friction slows participation, and when participation is low, legitimacy stays limited. But here's the shift. We are now seeing the dinar appearing inside modern digital financial infrastructure, the same type of systems used by global wallets, payment processors, settlement engines, and multi-currency platforms. And no, this does not mean a revaluation happened. It does not mean overnight wealth. It does not mean instant global reserve status. What it means is simpler, but far more important long-term. The dinar is becoming digitally accessible, and in modern finance, access precedes adoption. Let's slow that down. When a currency becomes digitally accessible, it means systems know how to price it, systems know how to settle it, systems know how to record it, systems know how to monitor compliance, systems know how to move it between ledgers. Banks and payment platforms do not add currencies for decoration. They add them after compliance checks, risk modeling, settlement mapping, and regulatory review. This is preparation, infrastructure preparation, not speculation, not rumor, preparation. And infrastructure always arrives before major financial behavior shifts, never after. Now, think about what this changes. Previously, dinar holders faced limited exchange points, manual verification, long processing times, inconsistent acceptance, heavy reliance on physical cash. Digital rails change all of that. Digital rails introduce faster movement, easier conversions, clearer pricing, better tracking, lower friction. And when friction drops, participation increases. That is how currencies gradually integrate into larger financial ecosystems. Not through secret RV announcements, not through private bank calls, but through slow, quiet system upgrades. Now, an important reality check. Digital access does not equal revaluation. Revaluation is a government policy decision. It depends on macroeconomics, reserves, fiscal policy, inflation control, and political stability. Platforms don't revalue currencies. Central banks do. Platforms simply prepare the roads so that if policy changes ever happen, the system can handle the traffic smoothly. That's the distinction most YouTube channels never explain. Infrastructure is not prophecy, it is readiness. Now, let's talk about what happens when digital access expands. Liquidity improves, meaning more participants can buy, sell, transfer, or convert. Speed improves, meaning settlements happen faster. Visibility improves, meaning real price discovery becomes easier. But liquidity has two sides. More access can also mean more volatility. More buyers and sellers mean price can move faster in either direction. This is why preparation must always be paired with risk awareness. Opportunity and risk always arrive together. Another key point. When global payment ecosystems recognize a currency internally, they can quote exchange rates, convert balances, settle internally between users, and route payments through partner banks. This reduces intermediaries, reduces costs, reduces delays. For dinar holders, that is a massive structural improvement compared to past conditions. But again, each platform, each country, each account type has different rules. Never assume, always verify. Now, let's touch peer-to-peer systems. As ecosystems interconnect quietly behind the scenes, value can move more fluidly across services. And that doesn't mean every app suddenly becomes a global exchange. It means interoperability is improving. Over time, this expands possible transaction paths. More paths, more flexibility. But peer-to-peer access also increases responsibility. Escrow, identity checks, platform reputation, transaction records. These are non-negotiable. Never send funds blindly. Never trust private offers promising special conversion access. That is always a scam. Now, let's talk scams, because they always appear when real transitions begin. If someone says guaranteed rate, secret early access, private redemption appointment, send funds first, keep it confidential, walk away. Real financial systems do not operate in secrecy. They operate in documented, regulated, traceable processes. Pressure is the scammer's weapon. Verification is your shield. So how should a serious holder approach this phase? Simple steps. Use only official platforms. Read fee and settlement terms. Enable two-factor security. Keep transaction records. Test with small amounts first before large ones. And never store large balances long-term on any platform. Consult tax or legal professionals for large moves. Discipline beats excitement. Preparation beats speculation. Now, here's the bigger picture. When a currency gains digital rails, global businesses can accept it more easily. Diaspora communities can move value more efficiently. Trade settlement becomes smoother. Financial institutions can monitor flows accurately. This is how currencies move from isolation to visibility, to usability, to broader relevance. Not overnight, not explosively, but step by step. That's exactly how modern financial evolution works. So let's answer the big question honestly. Does this mean RV is guaranteed or imminent? No one knows, and anyone claiming certainty is not being truthful. What we do know is this. Infrastructure is being prepared, visibility is increasing, accessibility is improving, system readiness is advancing. Those are real signals. Not fantasy, not hype, not doom, just measurable system development. And that's where intelligent observers stay. Not emotional, not fearful, not blindly optimistic, just informed, patient, and prepared. As we close today, digital access is not the finish line. It is the opening of a new chapter. At Dinar Update, we will continue tracking real structural developments, not rumor cycles, so you can separate signal from noise every step of the way. If this breakdown helped you understand the moment more clearly, stay connected for future updates. We'll continue following infrastructure shifts, compliance movements, and global payment integration as they unfold. Until next time, stay calm, stay observant, stay prepared. Because real financial change never shouts. It moves quietly first.